All right, I learned today that you need to optimize your strategy, make special conditions or exceptional rules to the overall general rules, and that's what I learned. The first part of this video is me trying to trade exactly to the letter of the law of my rules. And then later I realized to optimize it and make some exceptions actually created an opportunity for me to have an exceptionally good trade. Is that right? Is that wrong? I mean, I did break my rules, but in my opinion, I was optimizing or modifying them for better performance. Will that be a problem in the future? Because at some point, it goes bearish. When you're trying to go long and price keeps falling, at some point you have to have a cutoff moment where you say, all right, this is no longer valid. Which time chart am I going to use for that? 15-minute, I thought. Then now I'm using the 30, and now I'm looking at the 60, and the next thing you know, I'm getting deeper and deeper because I have to have a cutoff point. And I thought the 20 crossing under the 50 moving average was the cutoff point. But then I noticed there's a lot of good support that was just waiting for price to bounce off of, even though the 20 had crossed, and there was an exception. But if exceptions are continually made, it seems that you're always going to find an area of support level. And at some point, you have to take a loss. I mean, you can't optimize a strategy to where it never loses. And it has to lose somewhere. And at some point, the strategy has to be humble and accept the loss. And if I can't do that, and I'm trying to bend the rules and find and modify and optimize the rules to avoid a loss, then the strategy is already broken. The strategy will never be fixed. So I definitely need to consider that as a possibility also. Although the optimization today seems to be good, we're going to record it, we're going to change it, but will I do that again in the future if these optimized rules are broken or pushed to their limits? And I guess I'll have to find out when I get there. A strategy is only as good as many times as it's been tested, all right? And it's got to lose eventually. I've got to understand that. But anyway, here's how my day started today. And then I optimized in the second part, and we ended up having a good trade. So you tell me, was it good to optimize and change the rules a little bit? Am I going to just keep on doing that every time I come to a point where the strategy's not working and I'm looking for a way to continue to trade when it's lost? I think that's a strong possibility. But anyway, here's what happened today. All right, this is my journey starting February 5th for the full month of February to practice my moving average strategy. Every day we're going to be taking trades based on the rules of the moving average strategy. Now, if you don't know what that is, look at my playlist and watch the moving average strategy playlist. You'll find out what the rules are. But real quickly here, we're on the 10,000 tick chart. Price has broken under the 20 EMA, and it looks like it wants to go lower. Now, the rules, real quickly, is that we use the 10,000 tick chart, and if price breaks below the 20 and the 50, as long as the 20 does not cross under the 50, we're still looking for trendline breaks, Fibonacci levels. We're looking to go long. Once price breaks below and it starts to head down like this right here, then we are bearish. Okay, you can't try to go long on this right here. Even if it works, it's more likely that it'll fail. Trendline breaks to the upside are less likely to take place if these two cross. You might get lucky, you might catch a couple bounces, but we're looking for this kind of bounce when it's bullish. As soon as price crosses above the 20 and the 50, 20 EMA, 50 EMA, when price crosses above and the 20 crosses above the 50, now we're looking for trend line breaks to the upside. So that's what we're going to do. We're in a holding pattern right now. We cannot take a trade unless we see on the lower time chart. Then when we come down here on the lower time chart, we're looking for trends. Now we can draw our trend lines. That's what we need to do. So let's draw our trend lines on this chart here. Let's zoom in. Because price on the 10,000 tick chart has not crossed, the moving averages have not crossed yet, so we can draw all of our trend lines based on the pivots. Pivot to pivot, pivot to pivot, and here we go with our first pivot trend line break. Well, actually, if you look at that close enough, the first one here, I didn't catch it. I just opened up my platform, but the first one failed. You had a little poke out there, and then it went straight down. Okay, let's take a look at that close because we really need to see what's going on here. If we use this trend line here, the pivot at the top, before all this took place, we would have been watching this development of price. We would have drawn our pivot here, and we would have been waiting for this trend line to break to the upside. This is the 1,000 tick chart, so we're not as interested in these moving averages. So we're only interested in what the moving average is on the 10,000 tick chart. So let's just use the 200 here. When price breaks below the 200 on the 1,000 tick, then that means that price is below the 20 on the 10,000 tick. Even if price breaks below the 50 here, even if it comes down and breaks below the 50, as long as that 20 stays above, like it did here, started to curve down, but it stayed above. This trend line right here was a great profitable reward. Trend line break right here to the upside. There's a higher probability that a trend line break to the upside is going to work, higher probability, when all the moving averages are going in that same direction. So right now we still can draw our trend lines, but we have to be very careful how deep this price goes. Once the 20 crosses under the 50, then we have to hold up, not use this moving average trend line strategy. We can't do it, and it's even possible to switch directions. So we won't talk about that yet because we're trying to go long on this. This is a bullish market. We are using the hourly chart to kind of give us our overall direction here, because on the hourly chart, you still have strong bullish move. Now, if on the hourly chart we had the 20 crossing under, then we'd be bearish for sure. And right in here, we were switching directions, trying to look for trend lines that break to the downside on a smaller time chart. Right now, we're still very bullish, but we might have to wait though for price to roll around and come back around. But if price keeps going down and the moving average crosses, we will have to wait for things to correct before we can we can draw trend lines. And we can draw as many trend lines as we want and prepare for a deep pullback. And we would have to wait for price to come down and start to go back up over these two moving averages. And we would have to wait for, if it came down this far, we would have to wait for the 20 to go back up over the 50. So if these moving averages came down together like this and price is down here, eventually if price pops up here, we would have to wait. We would have to wait for the 20 to go over the 50 as price goes this way. And that is the time to start looking for trend line breaks right there. Okay, so let's just see how far down this goes. Let's take a look at our trades today. We were watching the 10,000 tick chart here, and the 20 had not crossed under the 50. So we were trying to take trend line breaks to the upside right here. That's our strategy on the 1,000 tick chart. Let's go look at the 1,000 tick chart. Up here is the area where it was going sideways for a while. And this is where I tried a couple of times. I did miss a good opportunity right here. Got here just as it was going up. And so I decided to take this one. And basically it was almost a break even with a little tiny loss. And I don't know why I took this one, to be honest with you. I think maybe I had a trend line coming down this way. But anyway, I got in high and it crashed. I'm glad I got out quickly. I might have been using this trend line here. I don't really like to use almost horizontal trend lines, especially at pivots. Okay, so this is something I need to learn. I mean, yes, it could have worked, but I like the trend lines to be stronger on their angle down. All right, that could have worked. I guess that's not too bad. It did close above, and it came down, turned red. I got in. I think all that's good. It just didn't have any follow through, so I'm not going to beat myself up too bad on that one. As price is going down into Fibonacci support, you think, you got between the 50 and 62% range. I got a bunch of trend line opportunities in here, and it looks like if I would have used this trend line here and drew it this way, it looks like I would not have even taken this trade right here. But for some reason I drew another trend line going down this way, and when it broke I went long. So I'm not going to really beat myself up too bad about that. It was a legitimate trend line in a support area. It came back, and we were, trying to retest it, and it just failed. It went right to the pivot area, And I tried again. I think that I'm just trying too many times too close together. And so I tried here, it failed. I tried here, 2 times and it failed both times. Real quick, real short little stop losses. And it looks like I drew a trend line here and it failed. And right here, for some reason, at this 62% range, I thought it was smart to go and add to my position after it just failed. I added literally, let's see, there's one here. No, I bought one here. No, I re-entered the position. And then instead of selling, I hit that 62% and it bounced up a little bit. I added, and then it immediately broke down and I sold one of them. I should have sold them both. So from here in this box, from here all the way down, all of this area I was holding one position. Instead of getting out of both of them, I held one. And what I would do is I would add back to that position when I thought a trend line was breaking. I thought a trend line was breaking here, and it stopped me out underneath its pivot. I tried there. I tried 2 more times here. All the while I'm holding that one that I kept up here, that I added to. I never got out of it. Here we were in the profit for a minute. But then it came all the way down and broke this pivot, and I sold the one that I added right here last because we added one I broke, added one I stopped out, I added right back. Okay, now that I don't know why I added right back. There's no trend line really here to give me a reason to add back. Okay, I need to recognize that. All right, so I was holding 2 here, and I was in the profit right here, and it came down. I only sold the one, and finally I got out of that last one right here because price on the 10,000 tick chart at that point right here, we were really crossed over. The 20 had crossed under the 50, and that was my major rule for this trading strategy. But then I was noticing some exceptions to the rule. Now let's talk about the exceptions to the rule now. Okay, on the higher time charts, you see the 30-minute chart here. We have a Fibonacci level right at the 200 moving average, which is where it bounced. And look how high it went up. I did end up taking that last trade against my initial rules, but I didn't feel good about it. And I know that people modify their strategies to, make them better, to optimize their strategies. So sometimes you can find ways of making exceptions to the rule. And here on the 30-minute chart, I thought that was a pretty good reason because it also had shown here on the 2000 tick, which if I was using the 2000 tick, by the way, drawing my trend lines on the 2000 tick chart, I would have avoided so many of those trades. But down here, when it finally started crossing with these pintails, I said, I gotta try, even though, the 20 is below the 50 on the 10,000 tick. The 30-minute chart looks good. This looks good. What else looks good? This is the 5,000 tick chart, and it's at a double 50 and 62% Fibonacci level from 2 different pintails, from 2 different pivot points at a really strong point right here as well. Okay, on the 5,000 tick, it's breaking a trend line also at that level. And I think I got one more here. Yeah, the 10,000 tick chart was showing that it's above the 200 moving average. It's still above the 200 moving average. And the big problem was that the 20 had crossed under, and that was my initial rule to this strategy. But I think there could be some exceptions to that, and I may have found them. So hopefully, I don't want to keep breaking the rules though, So let's just mark this as a moment to learn and grow and possibly optimize the strategy. And let's see what happens. And because of those exceptions to the rule, I was able to take 2 more trades and got out of one real quickly right here, but the other one ran pretty good. And if I didn't make a lot of mistakes on coming down, the move up could have, at least, made a little money or break even. I didn't have to have a loss for the day. I just attribute that to making ridiculous trades that I still don't understand. And I also just want to point out that on the 2000 tick chart, I could have avoided a lot of those mistakes because I would have been using this. It's a little bit cleaner looking. I probably would have had a loss here. Right here is when things started turning around. And I'm trying to think, where would I be taking trades at on this area? This trend line right here was broken and immediately fell. I don't know if I'd take that because when the candle tested, if I got long, it would be way down here and my stop would be so insignificant that's how I like to do it. I like it to come down and test, put my stop loss at a lower price, as low as I can to to the pivot. So that one would have failed if I took that on the, even on the 2000 tick chart. So we use that next pivot right there. Here's an area where it's breaking. These pintails you can't count. You can't count these pintails because they're not strong green candles. Now on the 1000 tick chart, I might have saw some strong candles in that area. Yeah, right here. You see how it's a strong candle in that area. But on the 2000 tick chart, it just looks like a pintail, and it's not very appetizing to take the trade. So if I was using this, I don't think I would have taken that. And then we got the green candle here. This green candle is invalid because now we have a new trend line. The pintails create a new trend line. So I would have avoided those losses right there. Seriously, there would be no more trade unless I took one down here from these pintails here, creating a strong move. And this would have been successful. That one would have worked. That one would have worked. Or at least break even on it. It doesn't have to be a loss. So I'm going to have to keep that in mind using the 2000 tick chart to help me see whether something's a real breakout or not, or whether it's just putting on a pintail at the top. That's going to be very useful. So that's a good thing to add to this strategy also. What is the loss today? And I can see some of the mistakes I made, and we're going to improve on it. We made some exceptions to the rule to optimize the strategy. And then over time with, experience, we'll have more discernment on this. So we're just learning. We're still learning. All right. Peace.